Good morning, everybody. Hey, welcome to Wednesday, November 18th. I hope your week is going well. Yesterday, hey, we gave back some yesterday. Let's take a look here before we get started with Dave. But you can see here that we did give back anywhere from about a quarter of a percent to a half a percent, depending upon the index. So, hey, you can see we're doing okay so far this year. If you were in the market January and you hung on, you're okay. You've made some money. But what does that mean going forward? Hey, this market continues to hit all-time highs. The question is, do you know when to make changes? Do you know when to allocate and reallocate? The one thing that you can control in your portfolio is the amount of risk that you have. That's why we developed the financial X-ray, so that we can drill down to determine between 1 and 100, what is your risk number and what is the risk number of your current portfolio. To find out your risk number, give us a call, schedule an appointment, 863-382-0037. Hey, Dave will be with us next click.
7 Highland. Hi, glad you're here today. Hey, good news. The sun's out, and it's 61 degrees now in Sebring. That means the Canadians are putting on their swim trunks now, isn't it? Standards change when you're used to being in a lot cooler. Time to check in on your money and see how Wall Street's doing this morning. We'll head downtown to the offices of Statler Financial Services. Phillip Statler is standing by. Phillip, good morning. How are you?
Hey, good morning, Dave. Hey, doing well this morning, halfway through the week. Yesterday was kind of a give back day, but maybe we'll just keep moving forward today.
It kind of looks like it from the futures so far, at the very least. Yeah, I was going to start out with kind of a note of reassurance. It was an off day yesterday. Dow was down 167 points. NASDAQ was down about 25, and the Standard & Poor's was down 17. But take it across 3 days, and the Dow is still up the better part of 400 points. So one profit-taking day of only 167 down. It's really hard to frown at that, isn't it?
Yeah, it really is. That's just one of those things that, hey, sometimes, you get a little exuberance in the market, right? And it has to give back a little bit periodically. And I really think that's what happened yesterday after coming off of Monday's all-time closing highs in the Dow and the S&P 500.
Oh, absolutely. And I mean, if I had gobs of money to throw around every day like that, I'd be day trading my way into the gains as well. And I think all of us would if we had the kind of research budgets the big guys do. So little profit taking did make some sense yesterday. And yeah, we were off by 0.5% on the Dow, and the other one's a little less than that. But still, net across a couple, 3 days, it's been a pretty good time. I did notice, kind of talking about the thing that drove it up on Monday, the Moderna vaccine news. Pfizer turned around this morning and said, well, further testing, our effectiveness rate is up right around Moderna's. We can do 95% too. Do you see a little bit of one-upmanship going on in the pharmacology industry?
I do when it comes to the numbers, Dave. They still haven't fixed that transportation issue that Pfizer's going to have. And how are they going to transport theirs when it has to be stored? I think I saw in the article at -4 degrees. It can be taken out and in regular refrigeration. I think it said for 3 or 7 days, something like that. But it's got to be at sub-zero temperatures to keep it for long term.
Absolutely. It's still helping Pfizer's stock being able to say that their effectiveness rate went up. But yeah, that's in terms of the competition between Moderna and Pfizer. It's good. That's definitely going to be a competitive disadvantage for Pfizer's vaccine, isn't it?
It is. It's going to be one of those things, because how do you get it, from here to there? And, it's just going to be I believe it'll be kind of a transportation nightmare. They're going to have to design some transportation for it, which is going to, I think, take a little while to get done.
That's going to take some butt-kicking reefer trucks in order to transport the Pfizer vaccine, if that's the one we've got the most doses on available. The Moderna one, for trivia point on the side, just requires a routine refrigerated level, and that we've got thousands of trucks that can deliver those around the country, because we've got reefer trucks from one end of the country to the other.
Yeah, it can handle regular refrigeration. I think it's set for 30 days. So that gives you plenty of time to move stuff around, get it given, and so then get new stock coming in. So I think that's going to be a one up for Moderna.
Absolutely. That's good news, and that's helping our sense of euphoria on the market this morning. We also got some macro news that's going to help it as well. We always talk about housing being so important because when a building increase happens, that ends up spilling out into all kinds of allied fields. We got the building permit report and the housing starts report out of the federal government this morning. Housing starts being the big surprise. It was a pretty good-sized beat, wasn't it?
It really was, Dave. We had housing starts were expected to be about 1.46 million, and it came in, I think, about 1.53 million, something like that. That was a pretty big beat for them.
And that's good news because when you actually start pounding nails, that's when the economic benefit happens. Building permits were about on target. Market I saw anyway was expecting about 1.56 million. Came in at 1.55. That's even close enough for government work for an investor with a bad attitude, I assume.
Yeah, it is. I mean, that came in basically pretty much as expected. It was a little bit down from last month, but I will tell you, neither one of those numbers are affecting the futures right now.
No, it looks like we're pretty much back into the euphoria over the fact that we got vaccines in the pipeline. One news item that I saw this morning, we talked about it before we went on the air. Walmart's quarterly report came out yesterday. We talked about how they did. But when you dug into the guidance section of the thing, Walmart was kind of interesting. They said our growth primarily came from digital and off-site sales, and we see a sea change coming with a major shift to digital sales. It almost sounds to me like Walmart is trying to take a great big bucket of cold water and pour it all over every brick-and-mortar retailer in the country right now, doesn't it?
Yeah, it really does. But hey, in a minute, you and I will talk about a couple retailers that have reported and seem to be doing pretty well. Hey, but before we do that, though, we didn't talk about this before we went on air, but I want to mention this article that I was reading. The Bank of America does a fund manager survey of different fund managers. And they said it was so bullish that it was off the charts, that Bank of America, their investment officers actually coming out and saying that they're turning bearish because of at least short-term bearish because of all this run up in the marketplace. They're telling their folks sell the vaccine. And that means as the market's going up because of the vaccine news, sell your positions because they think it's going to drop back down, and then rebuy them later. It's an interesting article, though, that they really think that the market is in euphoric state. It's one of those things that I think people don't realize, and they don't understand that part of the market, that when the market starts going up really fast, it concerns the people that do this for a living.
Well, yeah, I mean, a straight vertical climb upward always, well, not 100%, but 95% of the time, a straight vertical climb up generally means something irrational is going on. And that's a contrarian view that Bank of America is saying, but it's not an irrational one at all, is it?
No, it's really not. And you got to think that if Bank of America is making that call, that there may be some other traders and some other analysts that start to make that, investment guys, chief investment officers start to make that call too.
Absolutely. We saw a little bit of it short term yesterday. As we were saying, it was primarily profit taking. Folks saw a great big spike on Monday and said, whoa, let's get some money off the table and then buy it when it goes down again. So, yeah, when you've got billions of dollars to throw around and you can trade it around on one-day numbers, you look at this and you kind of say, whoa, opportunity to take some money. Those of us with small amounts that we pretty much have to sit on for a spell, that also indicates a risk control element, doesn't it?
It does. We need to make sure we have the right risk parts to play within our portfolio, especially as folks get closer and closer to retirement, because the only thing that folks can control in their own portfolio is the amount of risk they take. And you know what I always say, people don't usually know how much risk they really have in their portfolio.
Yeah, understood. Yeah, this is a time there's an opportunity to make money, yes, because there's euphoria in the market. But if you put too much on the euphoria, when it does finally wear off and we see a downtick, it's going to be a real unpleasant experience. So risk control accounts for a lot. We got some reports out this morning. You mentioned that I was talking about Walmart's bucket of cold water. You've got some hot water as far as some of the reports that came out, don't you?
We do. Yesterday we talked about, I think it was yesterday, we talked about Walmart and Home Depot. Today we got Target and Lowe's. And so Target, man, they had a great quarter. They beat by $1.20 a share. I mean, they came in at $2.79 on earnings. Revenue was a beat also. Get this one, Dave. Same store sales were expected to increase by a little over 11%. They were up 20.7% for the quarter.
Holy crap.
Yeah, a lot of good news there for Target. They're trading up this morning, 2.9. I'm sorry, just changed 1.9%. As it dropped back down a little bit. So their 52-week high is share price of $1.67. They're at $1.66 right now. So getting close to that number.
And actually, on my delayed quote, they were over 167. So, yep, they could very well hit an all-time high today, couldn't they?
They really could. But let's keep with retail before we go to Lowe's to compare to Home Depot. Lowe's came in. I'm sorry, not Lowe's. TJ Maxx came in and had a really a good quarter as well. They came in at like 71 cents a share. And Dave, that was even better than the same quarter last year, which to me is just incredible for them. Yeah. They beat by about 30 cents a share for the quarter. So some good numbers there for TJ Maxx. And they're up about 3.9% right now.
Cool. And you did mention Lowe's being another one. And
I did.
Home Depot was yesterday. I'm seeing a weird, and we talked about this before we went on the air, because I'm seeing Lowe's on the negative side of the fence this morning as far as pre-market trading.
Yeah, well, they missed earnings by a penny. But their revenue was way ahead of forecast. So was their same-store sales. I mean, their same-store sales were expected to be about 23% increase, and they came in at a little over 30% increase. So that was a good number. I didn't look at them first thing this morning, but they said that they jumped like 6%. I'm thinking maybe they read that wrong or something, because I've got Lowe's actually trading down 6.75% this morning.
That's the number I've even got on my delayed quotes, and I'm thinking one rotten penny on the earning per share. Your stock tanks by 6.5%. That's amazing.
Yeah, that's a pretty big number there to force them to think that that's really the deal. I mean, I don't quite get that one.
Somebody must drilled down on that. I know you didn't have a report from Boeing, but we got really big news on Boeing today, and that put them at the top of my big gainers list this morning.
Yeah, we did. They actually, the FAA has approved the return of the Boeing 737 MAX back to service. So we'll see how that plays out for them. It's helping their stock price for sure. They're up 6.6% this morning.
Yeah, they're right at the top of my big winner list this morning on a relatively green day overall.
Yeah. The last earnings report I have for you today, Dave, is Lazy Boy. They weren't lazy this quarter. They tore it up. They beat by about 32 cents a share. They came in at 82 cents a share earnings. Their revenue was ahead of estimates. They have a backlog, which is incredible for them right now in terms of manufacturing. They were able to increase their profit margins. A lot of good news for Lazy Boy. They're trading up 5.25% this morning, and actually at where they are right now, they will open at a new 52-week high right now.
Cool. I guess that doesn't surprise me that much. Lifestyle-wise, what do? We wore out our recliners during the pandemic shutdowns.
That's right. So it's time to replace them, right?
Replacement time. I wore out my Barca lounger. I need a Lazy Boy. setting the table. Does anybody still have Barca loungers? That's so old. I just came out of my mouth. Let's see. The closes yesterday were in the red, like we said, down about 0.5% on the Dow, 0.25% on the Nasdaq, close to 0.5% on the S&P. We kind of racked that up to profit taking. Are we turning the corner, Phillip? 45 minutes early. Where are we going?
So we are up on the indexes. So we've got the Dow up about 0.4%. We got the S&P 500 up about 0.25%, and we've got the Nasdaq up a little over 0.1%, nothing huge. On the commodity side, we got a little bit of a mixed bucket this morning. Silver's down about 1%. Gold is down about 0.9%. Crude oil is going up. It's up 1.4% this morning, $42.21 a barrel right now.
That's good to see. Mixed bag overseas this morning. The Asian markets closed mixed at 6 a.m. this morning. Great Britain and Germany are also mixed this morning. One up, one down, just a little bit either side of the zero mark, though not a lot of movement in Europe halfway through their day. It should be made note the fact that some of your advice seems to be falling on the big money guys too, Philip. The bond rates are indicating kind of a flight over to safety as well. They're hedging their bets because I got like 7 basis point drops on the mid and long-term federal bonds. So maybe they're listening to us in the morning and looking at risk control too there. What do you think?
Hey, yeah, I don't know that you and I are big enough for that, but it'd be nice to think that.
Yeah, I can always pretend that way.
That's
anyway.
right. That's right.
Like we said, if the big guys are looking to try to stabilize things, you should too. How do I control the risk in my portfolio by getting a hold of you, Philip?
Hey, then give us a call at 863-382-0037 to schedule their financial x-ray so they can definitely know how much risk they have in their current portfolio. They can go to my website, statlerfinancial.com, or you can catch me this weekend on the Statler Financial Radio Show, 6 a.m. on Saturday, 10 a.m. Sunday morning on Highlands News Talk 730.
All righty. Yeah, that's right. Remember, the noon program this week will not happen because we got a Gator game, but 6 o'clock on Saturday and 10 o'clock on Sunday morning over on News Talk 730. Philip, thank you so much. We'll catch you tomorrow, all right?
All right, buddy. You have a great day.
Appreciate you. It's 105.7 Light FM and Statler Financial Services, Phillip Statler.
Hey, folks, I definitely want to thank you for joining us today. I hope that your week is going well. I look forward to speaking to you again tomorrow. Until then, have a great day.